Hi guys, this is Miss Doctor here. Today we are going to talk about something really exciting. Taxes. Action. So we're going to talk about taxes today, especially in the UK. Well, it is in the UK. We're going to talk about the UK taxations and all the different taxes and how we can do tax avoidance, which is legal. It's not tax evasion. So just listen out. We're going to talk about something really important which affects our lives, and it could be the difference between just getting by or being financially free. So listen out. First of all, let me just say, if you're new here, please make sure you subscribe and press the bell icon, and also give me a thumbs up as well. Super duper important. So taxations. The very first and very common tax we have in the UK is income tax. Income tax is something that you can see on your payslip if you are working for an employer. Then you know, you could see, depending on what kind of tax bracket you are in, it could be 20% all the way up to like 40%, depending on your income really. That is the most common one. The other one that you can also see on your payslip is the NI, National Insurance, which is mainly for healthcare, but also for paying other benefits as well. That's also something you will see on your payslip. The other one that you don't see on your payslip, but everybody kind of, well, most people need to pay it, is the council tax. Again, there are different ways to reduce it, or you might not even need to pay it. Apart from that, you definitely heard about VAT. So VAT, value added tax, is something that you pay on goods and services. It's normally, well, it is 20%, and it's on your receipt, it's on your invoice when you buy anything pretty much. And the next tax, especially if you're a homeowner, but even if you're not, you might have heard of it, is the stamp duty. So stamp duty is for properties. So if you buy a property, you will have to pay stamp duty. And another stamp duty that not many people heard about, I mean, I really hope that if you're watching this channel, you should have heard about it, is the stamp duty reverse. The stamp duty reverse is for stocks and shares, and it's normally about 4 to 5%, which you might think, oh, that's not a lot, right? Okay, come on, Miss Doctor, that's not a lot. But it does add up. It definitely adds up with all the charges that you already paying for the platform, and then you've got the stamp duty reserve as well. Let me just think about any more taxes that we need to pay in the UK. No, I mean, let me just think. Actually, there is one more that not many people know about, and it might not actually affect you, but there is one for immigrants. So if you needed a visa to come to the UK, with your application you had to pay, it's kind of like a health taxation. So whether or not you're going to work in the UK, in order to use the health service, you need to pay this tax, and it's actually a lump sum of money with your visa application that you need to pay up front, and it could be quite a lot of money, £400 to £600 or something like that. That's something that really affects the immigrants. Do I agree with it? Story for another day really. This is about taxes, and let's get to the best part of the video: how to reduce the taxes, how to tax avoid, which is again not the same as tax evasion. Okay, so tax evasion is illegal. It's basically not claiming all of your income, and it could result in imprisonment, so it's not a fun game to play. But the tax avoidance is just being smart with your money. If you know your rights and you're paying the correct tax, that's good for the government. So let's actually talk about how to reduce the tax. First of all, the income tax can be reduced and will be reduced if you are in the correct tax bracket. It's your responsibility to make sure that you pay the correct tax, whether you are self-employed or an employee. It's not your employer's responsibility. So if you have the wrong tax code on your payslip, it's your fault. You can sign up for self-assessment on the government website to make sure that you actually pay the correct tax. you take your P60 and you submit your own tax return every single year. For example, we just had the COVID-19, well, we're still kind of going through, but because of the pandemic, a lot of people had to work from home, and that changed the tax bracket. So even if you just worked from home for one day, you're already entitled to less tax on your payslip. So it's really, really important to make sure that you pay the correct tax. As I said, it's your responsibility. You can drastically reduce your tax that you're paying by having the correct tax code on your payslip. The council tax. If you're a student, you don't have to pay council tax, guys. You need to make sure that you prove you are a student and you don't have to pay council tax for the duration of your course. If you are a lone parent or just live alone in a property, again, you have a reduction in council tax as well, which again, you need to let the council know, and they will reduce your bill, really. When it comes to council tax, it's really important to, especially if you are about to buy a house, you can do your research and you will find that different councils actually charge more and some of them less. So if you want to reduce your council tax, when you are about to buy a new property, you can consciously look at councils that don't charge that much. So if you live in certain parts of, let's say, London, you might pay a lot more tax than other parts of London. So if you really want to reduce your council tax, that's one thing to look at, that's one thing to consider, to make sure that you are not paying so much council tax and you are choosing the correct area. Another way to reduce tax is, if you are fortunate enough, or unfortunate, is your kind of point of view, if you're married, then there's something called a marriage allowance. So if you are a high tax if you are a high tax payer, but your significant other isn't a high tax payer, then you can actually transfer some of your allowance to your partner, and that way you are going to pay less tax. And as I said, the income tax is tax-free up to £12,500 annually. So if you top up your partner's allowance up to that amount, then they won't pay tax up to that amount, and of course that will kind of reduce your tax as well. One way to reduce your tax, well, when you're saving money, you don't want to double tax your money that you're saving. So what I mean by that is, when you earn your money, you pay tax over that salary already. So when you are saving, there is a way to actually save tax-free, which is the ISA, individual savings account, and a different type of ISAs in the UK. We've got cash ISA, where you can save up to £4,000 annually tax-free, and you've got the investment stocks and shares ISA, which £20,000 annually that you can save up tax-free completely. And we've got junior ISA, so if you are under the age of 18 or you want to save up for your children, then you can open a junior ISA on their name. They can only withdraw the money at the age of 18 because it's going to be transferred to their name, and they can decide whether they want to withdraw the money or just leave the money in the ISA. Hopefully they will. That's my wish for my kids. But yeah, so we've got junior ISA as well. There's something called a LISA. Well, LISA is got an age restriction. So if you are between the age of 18 and 39, so less than 40 years old, then you can open a LISA, lifetime ISA. Unfortunately, at the age of 40, the window closed. You can't actually have a LISA anymore. There is only two purposes that the LISA has. One is to buy a house, and the other one is to save up for retirement. So this is the only purpose for that one. So you keep that in mind, because there is a charge for withdrawal. However, if you save in the lifetime ISA, the government actually tops it up with 25%. You can save up to £4,000 a year, and the government tops it up with an extra £1,000. However, you need to keep in mind that you need to wait up to 1 year before you withdraw the money from the LISA as well. So you can't just withdraw, let's say you started your leaves out in January, you can't withdraw 6 months later, you need to wait 1 year. So that's something very important to consider. Another way to reduce your tax bill is to save in your pension. If you are in the threshold where you actually would pay more tax, and it's just a certain amount you are over that threshold, you can actually transfer that money into your pension, where obviously you are saving up for your pension, your retirement years. However, the government is going to match that contribution with 25%, and also it's tax-free as well. But of course, it's a saving for your retirement, so you can't just withdraw that. To keep that in mind, but again, that could reduce your tax bill. Yeah, so these are the different ways for tax avoidance, and also just to understand taxation in the UK. Really important. And if you live in the UK, you need to know these things, because we need to be smart, we need to know our rights, and also just, you know, get more money in our pocket. And just because of negligence, you don't want to leave more money in the government pocket, because as I said, it's good for everybody if you don't rely on the state, if you know your rights, and you become wealthier and wealthier, and that's exactly what we want to achieve. So I hope you enjoyed this video, and if you did, give me a thumbs up and also subscribe and hit the bell icon as well, and see you next time.